Hello traders, hello everyone. Welcome to our new webinar. Okay, so just please let me know if everything works well. It looks like that voice is fine. I see some lag here, so I hope everything will be okay. Okay, so let's start, as you know, with with the dollar or US yield. As you know, finally Fed cut rates by 50 basis points, more than expected. 25 were expectations, but interestingly enough, we have seen dollar that stabilized after this rate cut. So it looks like that it has been some kind of a buy the rumor, sell the news impact here. Now we're looking at the US yields. Keep in mind that we are still tracking this ongoing wave C for a few months now, and I still think there can be a bit of more weakness, but because market is now maybe trying to stabilize a bit after this buy the rumor, sell the news effect, I just think that maybe we'll see wave 4 in the near term. Keep in mind that dollar and the US yields, as I've been talking about in video that I released on Friday, was mostly driven lower by Fed cuts expectations, and now when this finally occurred, we may see some stabilize on the US dollar. But possibly we still are going to retest some levels here in the near term at the lower side before we potentially turn higher for a higher degree wave 4. But overall, I just think that this wave C is incomplete, and that we can be targeting these April levels from 2023 after that rally. So watch out maybe for more weakness still later this year, but then in 2025 I just think that very big cycles can come to change that year. Okay, so for now we are still here in a downtrend, but just temporary. We could see some recovery. Also keep in mind that for now, when we have these Fed cuts, well, it can have positive impact on stocks, unless there is a recession and they will be keep cutting, and that's when dollar will completely change and diverge from the US yields. And here's a very good chart. It's actually from edwardjones.com. You can see that the S&P 500 returns for 18 months following the first Fed rate cut. Okay, but that's an example where there were no recession, and you can see that there was a quite very nice move to the upside. So in my opinion, there can be still more upside on stocks, and possibly there will still be opportunity within these trends, because as I said, I still think that dollar itself did not bottom yet, but we will see some rallies. Now if we review some of the higher time frame chart here, actually it's daily, but it's zoom out here. Keep in mind that we still haven't seen dollar breaking this 99.60 level. Okay, we broke this trend line support. We also came out of this triangle as well, so I'm thinking that more weakness can still be seen. But as I said, maybe some consolidation here in the near term will continue. And if we see some kind of a rally, I still think that this would be very healthy for market to take a breather before we may continue even lower. So if you see some bounce, watch for potential maybe ABC rally here, and 102, 101.70 is a very nice potential resistance for the next sell-off. And what's the most important here, and why I think that dollar after potential stabilization now could continue lower after that ABC rally, is because here from that July lows, okay, we have seen a corrective movement, and these lows still haven't been taken out. So before we may say that whole downtrend will come to an end, you have to see these lows broken. So I still think that there will be opportunities to be short US dollar, not at these levels. I just think that much better levels will be here around 102. And basically I'm tracking this wave count here. Okay, so we have seen a break to a new low, just temporary one, a spike, very interesting, because possibly a lot of traders wanted to jump on the short side after they saw that Fed cuts for 50 basis points. Market does the opposite, which is not a surprise after all, and now we see stabilization. So I think that this can even be some kind of an ending diagonal here in a fifth wave. Okay, so what's the most important message here from that wave structure is that we are seeing very overlapping price action, right? And this kind of a price action typically occurs in late stages of current trend. Okay, so I think that these 5 waves down that are still in place from July highs are now slowly coming to an end. So maybe in the near term we will see another retest of the lows to completely unfold this ending diagonal in a valid formation. Of course, you need to have 5 subwaves here, so maybe another retest of the lows, and then possibly we could stabilize. But if you're looking for some kind of opportunities here, keep in mind that you are in a very late stages of this current cycle, and that certainly I want to see 102 retracement before market may continue even lower. So 100, this should be very, very important support if we see another low, and then you have 99.50. So after ABC rally, I would be expecting more weakness. And also, if you look at another wave count here, it's slightly different one, okay, but also suggests that after a bounce, it maybe already we bottomed. After higher prices, 180, 102 will still be very important resistance. There were a few tests of these levels in the past, so I think if we can see these levels coming, then another leg to the downside can occur with slightly different wave count, but still it's a bearish wave count. So as you can see, I'm expecting maybe some stabilization, possibly from another new low in the near term, some stabilization of the dollar after, because the Fed cut rates. And I think that, as I said earlier, it has been maybe priced in a lot of the market moves, and that's why we could see the opposite reaction from the market. But certainly market believes that Fed will cut even further, and if that would be the case, it could send the US yields to the downside with the US dollar, unless there will be some fears of a recession. But we are not there yet, so I think that for now these correlations remains in play here. So if in the near term, as I said, maybe we see another retest of the lows here, watch euro dollar. I think that euro dollar is quite interesting here. As you know, euro dollar bottomed here despite the fact that ECB cut rates, and now we stabilized and looking to be, it's looking bullish for 1.12, I should say, because keep in mind that that was a very nice free wave drop, and also we haven't seen a retest of these highs yet. So always when you're seeing a very strong uptrend and then a pullback, and you think that that was a correction identified by Elliott wave rules, then of course before you may say that market is going to top out, you have to see that price will move beyond the previous highs. So the whole correction should be fully retraced. So that was an ABC pullback, and now we are trying to stabilize, and possibly maybe triangle, if we'll stay in this range for slightly longer time, could still be an option here. So I think that these upside levels are still, and targets are still very valid, unless we suddenly drop back below 1.10, then I think that something else is going on here and could be a bit tricky. But for now, because we held these key levels, I just think that more upside is certainly possible here. I also like the idea that we sold off earlier today. As you know, there were some lower than expected PMI figures from the Eurozone, but I like the idea that there were some sharp moves at the start of Monday and the start of a new week. Usually these sharp moves at the beginning of a new trading week will be reversed. This kind of flows are very easily reversed during the US session or Tuesday reversal. I'm sure that you already heard before for Tuesday reversals. It means that what happens on Monday, everything can be retraced on Tuesday or Wednesday. So I like the fact that we came down here. Even maybe some liquidations could occur here around 1.1070 or so, because that was a spike here. I think following the Fed rates decision, and now we are trying to maybe to stabilize. So maybe this area has plenty of stops down here, and that's why maybe it could be even much more attractive for potential bounce if these liquidations will happen. So euro dollar, I just think that it's still here in uptrend. Now let's take a look on cable. As you know, cable has seen a very nice push higher last week. It was firstly the CPI, the inflation data, came out as expected at 2.2%, but Bank of England, which was the most important, was on hold. Okay, even more members voted for hold than previously. Okay, so that was the key. One member more was on hold than in the previous meeting. So that's why we have seen a push to the upside here on cable. But I would be very careful on cable. I mean, there's still room for 1.34, 13450, which has been my upside projection for some time now. But keep in mind that we are seeing maybe here some wedge formation in a fifth wave. So again, even if we see break to the upside, well, it can be a bit late. I think that there can be some higher degree correction coming on. Also, I have another wave count here, okay, which shows that even slightly higher. Okay, let me delete this to not confuse you. Okay, even if you look at this shape, I'm certain that this looks like a potential wedge formation ending diagonal. So even this one suggests that there can be some limited upside in the near term. So again, be very, very careful up here. Now, what can be very interesting this week is probably Aussie, because as you know, we will see a new announcement from the RBA, who is expected to hold rates at 4.35%, and the reason is because inflation in Australia was slightly up in second quarter more than in the first one, and this divergence between Fed and RBA could possibly keep Aussie dollar in uptrend. And so far we have seen some very nice push to the upside. Last week we are trying to break this trend line resistance and also wave this swing high. I know that wave E here was a very small one, but for now, even if I think that that was a wave 2 pullback, I should be then even more bullish. So I'm thinking about more upside on Aussie. We will see what if everybody really is going to be on hold, if maybe what will be the message for further actions. But from technical perspective, I just think that there can be much more upside coming. Now, maybe not only Aussie, it could be also interesting if you look at Aussie versus Swiss franc, okay, because Swiss National Bank is expected to cut rates. So if you will have one that is cutting rates and other that is on hold, well, maybe Aussies versus Swiss franc could see some very nice upside potential. And this is what I have been looking for. I think that we have some very nice potential wave structure that signals for more upside. I know that we are at the potential temporary resistance here, but if you try to apply the Elliott wave count, then I'm sure that you see this as an ABC drop. So that was a correction. It means that it's not impulse, and if it was correction, it should be fully retraced, right? And so far we have already seen a retest of the highs. But before we may say that this recovery away from that lows is finished, well, how many waves we need? We need 5 waves, right? And so far, I think that we have some very nice and beautiful wave structure here. I can also count 5 subwaves within this wave 3. So maybe by the by the dip scenario could be some very interesting on this one for more upside. Maybe some support around 57.90 down to 57.60. This could be quite interesting. Okay, so I think that Aussie overall is looking quite good and could certainly see much more upside after pullbacks, especially on this pair. Now, regarding commodity currencies, maybe Canadian dollar is trying to wake up here. Keep in mind that we have seen some very nice and beautiful reaction in 5 waves to the downside here, and then we rallied in 7 swings for the 38.2%. And looks like we are breaking this flag formation now, so even this one signals for more weakness down to 134. Very important support could be here around 133.60, which we had some spiked minor one here back in January of this year. So in the near term, I'm thinking about more weakness on this one, and it has a very nice, beautiful structure. Now, always when you're looking for some potential opportunities, these are the structures that you want to see and label the wave count, because this clear formation, clear price action will not allow you to have different multiple wave counts. Okay, and you will be limited to maybe 1 or 2 wave counts, and that's when you will probably build on your confidence. And clearly that was a very sharp drop, so we know in which direction markets is trading impulsively. It's to the downside, and then you have this overlapping recovery back to the previous 4th wave area, and also some strong swing lows here from May and July of this year. So definitely that's a very nice, very interesting zone. So I think that more downside here is certainly possible, and this maybe is telling us where or in which direction also other commodity currencies can be headed. Now let's take a look on dollar yen. As you know, dollar yen slightly rebounded last week. Firstly, it was maybe because US yields bottomed. As you know, we also said on Monday that positioning for Japanese yen was at some extremes, so we were looking for some kind of a limited upside on Japanese yen. And then most importantly was obviously Bank of Japan on Friday, who was on hold with rates, and obviously they maybe will not hike that aggressively because the inflation was slightly up for August. So this is what is turning this pair around, but I'm not really convinced if this wave A has already bottomed, or is maybe there going to be another retest of the lows, the recent lows. But certainly this appears to be like a very strong strong support area. However, I'm bearish on dollar yen and will be expecting even more weakness, but I'm just saying that sooner or later we could see this correction coming, and maybe this is a close, because if Bank of Japan is now on hold, is not going to be aggressive that at this stage, then maybe it's time for a pause here as well regarding the price. So if we see some rally, I think that rally will be temporary, very strong resistance that everyone will watch. If we get there, will be anywhere between 150 and 152. So that zone could be quite attractive for another very strong drop. And now we could be dealing with some sideways price action going forward. Now, if we also look at, someone asked for gold. Well, we post a lot of analysis on gold. I will take a look on silver, so make sure to check our Twitter feed, because usually I post some charts there. So this time I will look at silver. As you know, both gold and silver were doing pretty well. Recently we have seen gold breaking to new all-time highs. We could be, however, maybe approaching some resistance levels on gold, but that doesn't mean that silver will also turn to the downside. Watch gold-silver ratio. Maybe the gold-silver ratio is now turning to the downside, like it started last week, if not 2 weeks back. And this could be a signal that silver is trying to catch up gold a little bit. So maybe gold will try to slow down at these all-time highs and silver can still catch it. And if I look at the wave count itself, I think that still we have a very nice solid bullish wave structure. Okay, we have been looking for this free wave decline and was looking for a third leg up, even with an alternate wave count. If you recall, we were expecting third leg to the upside. We just didn't know, and we still don't know how strong this third leg will be. Is this really wave C, or maybe like with our primary wave count shows, are we maybe in the middle of a wave 3? What will be important to confirm one of the wave counts is pay attention on the smaller time frame. If the pullbacks will be in 3 waves, okay, in ABC, then we know that this is a correction. If you will see then a bounce from that support, then you know in which direction we go. If suddenly market does something like that in 5 waves, then you will know that this is not just a corrective setback, but most likely a change in trend. Okay, so it will be very important for us to keep an eye on this price action very closely in the next few days to figure out where silver can go. But I certainly leaning more towards the bullish side here, because definitely I want to stay with the uptrend after all. But I'm always ready if something changes, rather than be surprised here. Okay, so if we see a dip, I think that there's still a chance that we will see just an ABC pullback, and in such case $29.60, $30 is a very important, very strong support. Okay, this one definitely at $29.60, $70 that occurred after the Fed, I think that during Asian session even. So that it's a very, very important level. We should hold this one. Maybe we can still spike below it and then reverse, but we should definitely see some response to the upside from there. If not, if we start just keep moving to the downside and riding towards 29, then we will most likely adjust our wave counts, okay, accordingly. Now let's take a look on the S&P 500. So the S&P 500 overall, still we are in a very nice bullish phase here. So markets obviously like the Fed's action, and I still think that there can be more gains coming here into the 5th wave. I know that this triangle is not the perfect one, okay, but if I have to relabel it when market breaks certain levels, then I will even try to label this as a triangle. But definitely I would not be counting it when the price was trading at these levels at the time. Okay, it's very hard to come out with this kind of a triangle and be correct each time, because it will be very rare. But that's why we also presented another wave count and even shared this one before, showing the idea that we could possibly see even a strong break to the upside into the 3rd leg. Okay, maybe even some head and shoulders formation is also very possible here. We moved slightly higher, and as long as we are above 5,400, I still think there is room for more upside. If suddenly we break these levels, 5,400, then I think that whole price action that started back in July is going to be much more complex, but still corrective. Okay, I just don't want to say that we are topping out, especially when you have this some kind of a free wave movement, just temporary move to a new high, and then market maybe breaks and reverse to the downside. So I still think that stocks have more upside to go. Maybe if we'll see some dips ahead of elections, still fine. It will be maybe even some better levels to look for potential buying opportunities, because as you know, after elections, stocks may try to do well, and it would be much more easier to find the supports at the lows rather than up here. Now, since we mentioned and talked about stocks, if we take a look on some of single stocks, maybe firstly semiconductors here, no change. We are still looking for minimum 3rd leg to the upside. We have this unfilled gap here from July, from 2 months back. So I'm looking for more upside And then this unfilled gap, as you know, can firstly act as a resistance, or maybe we'll just simply break through it and move to new highs here. But in the short term, if you're watching this one, I just think that we completed this correction and that we are in the third leg higher. Even if you look at nvidia, still looking to be sideways here within higher degree uptrend. Ideally it's a triangle, so maybe it's not a time to look for potential buying opportunities here, but overall just this whole price action tells me that we are just bouncing down here a bit. But of course it's not always easy to say what kind of a wave pattern structure market will form, but certainly looks like we could see continuation higher after this pause here. Maybe in October already we could start seeing some actions to the upside. Now last week we also talked about AMD as well. As you know, in recent weeks we highlighted that that's a very nice key support around 140, and so far we are turning to the upside. Again, same story here, unfilled gap, and then just be careful up here. Okay, it could be limited upside, could be extension higher, whatever. But if I would be long, I'm not long here, but if I would be long, and whenever we move into this area, try to maybe to book some profits and be aggressive on stops. What we have left, Meta, we covered this one last week as well. As you know, we've been tracking this triangle, we highlighted a few times, and was looking for a break higher, and you can see a very nice breakaway gap actually, moving already into the first targets here around 570, but I think that even 600 is a very valid scenario. But keep in mind that now this is a breakout of a triangle, and whenever this occurs, it means that you are in a final leg, in a fifth wave. So final leg of an impulse. It means that maybe in the next few weeks we will start seeing a top formation here in this area for a wave 5. So it's definitely a bit late, maybe too late to join this fifth wave, unless you're trading very small time frames here. But if we will start seeing prices coming back into this triangle range, back below 540, 530, then I think that top will be in, okay, which I believe will occur in that area here in maybe in the next few weeks after all. I also looked at some other single stocks as well earlier. Here's Adobe. Now this one is quite interesting because it loves the gaps. As you can see, always when I'm looking at single stocks, gaps are playing very important role. Okay, firstly, when they are unfilled, they act like a magnet. When they filled, market reverses, because unfilled orders in that unfilled gap will get executed and flows will change. So you can see that the first very interesting gap that was filled later on here was here in May. Okay, we came to the downside, we filled, we gapped higher. Then you have another gap here from earnings back in March. You can see that after this rally, we again stopped in that area and came and then reversed back to the downside. And what we are seeing now, this should be changed to unfilled gap. Okay, and what we are seeing now is there was a gap to the downside, okay, after earnings. You can see that we have some unfilled gap at the lower side, and we said that usually those gaps can be as a support, while the open gap, okay, that are still open, can act as a magnet. So maybe this will be very interesting support for potential ABC formation here in the zone around 490 or so, and then we could see another push to the upside to fill this open gap from earlier this month. Okay, so I think that this is quite interesting because obviously this market respect the gaps, and I just think that we should not ignore potential supports down here. Okay, also we have been looking at Coca-Cola as well in the past. It was a few months back, and back then, as you know, we been bullish. We were looking for more upside because clearly that was a corrective drop to this October 2023 lows. Then we rallied in impulsive fashion. After this consolidation, we are just now breaking sharply to the upside. And again, that's the wave structure that is very clear, okay, because you will very hard label this wave count in any kind in different formations, okay, because you have a counter trend movement in 3 waves, and then you have very strong breakout, which is not in 5 waves yet. And you have a textbook example here of an impulse in progress. So I think that more upside could be seen if you will try to discover maybe some short-term levels. Let me check where the 23 and 38.2% stands. So the ideal support is definitely here around $69 to $70. So that area could be quite attractive for another push, another bounce to the upside. If we suddenly go back below 61, which is slightly below the previous swing highs here, then the top is in. But as long as we are above that level, you know in which direction we should expect further moves. Now let's take a look. I will look at some of the charts maybe a bit later. Okay, Stellar and Euro, I will take a look at those two. Now looking at the crypto total market cap, maybe first here I will just try to stay focused on a higher time frame charts, because I'm quite certain that on a smaller time frame charts you were seeing that there is a very tricky price action. Maybe we have now some price action that is telling us that maybe cryptocurrencies will continue higher, but still it's a bit tough situation, not really breaking some key levels. So maybe in such cases, especially when you have different possibilities on smaller time frame charts, just go to the higher time frame charts and remember where we are on a big cycle. And you can clearly still see here that crypto total market cap shows an uptrend. We still should pass these highs from 2021, and we so far have a very nice and beautiful pullback. We are trying to stabilize now, and if September month will stay strong, I think that we will see more upside if the previous whole candle will be erased. So with that in mind, of course, I'm also expecting Bitcoin to continue higher as well. We have some very nice pullback here. Just to say exactly when we will see breakout higher, it's a bit tough, but maybe later this year, if we'll just keep consolidating here, could be very interesting. Maybe November, December. Also elections, as I said. Also dollar weakness should resume if we see some rally, and that will be maybe the perfect time when cryptocurrencies could break higher. Just recall here, liquidation heat map, still a lot of stops from those who are short have stops around 70,000 or higher. So still like a magnet zone, and we've been talking about this one when the price was much lower. Okay, someone asked for a dollar Swiss. Okay, so let me take a look. Now dollar Swiss is, I was looking at it earlier, but I mean, because we've seen Swiss National Bank will really cut rates, I just realized that maybe we could see a bit of more upside here, but overall I'm seeing this to be as a wave for corrective rally, but we could possibly test slightly higher resistance levels around 85.60. But overall I just think that we are here on a higher time frame charts. Okay, we are here dealing with this some kind of a diagonal formation, so maybe this wave B rally will show sooner than I think, but overall it's still a downtrend. But if Swiss National Bank will really cut rates, if Fed is also cutting rates, then maybe dollar Swiss is not the best pair to look for. That's why earlier I checked Aussie Swiss instead, okay, because it has obviously different dynamics. But Swiss franc in general still is looking, it could strengthen versus US dollar, but maybe not versus other currencies, because this pair is mostly moving to the downside because of the weak dollar. Someone asked for eurocad. I'm not sure if I have eurocad here. Let me check the fresh wave counts. Okay, so eurocad looks like that it's coming out of some kind of a triangle here. So maybe more upside is possible, but let me check. Okay, so we could label this as an A, B, C, D, E. Okay, and what's very interesting, actually quite beautiful, I must say, is that you have this ABC pullback in 3 waves on a smaller time frame back to this triangle support. So I think that this triangle support is from the outside obviously is quite interesting, and that we could see a new push to the upside. Now we are seeing some pullbacks, so if you want a bit more confirmation, if we break above 151 60 70, then I think that new highs will follow. Now the only question is if maybe this current correction can come to can unfold as a more complex one, but certainly it suggests the price action, because the drop has been in 3 waves here, that sooner or later we should continue even higher here. Now someone asked for gold. Okay, let me do an exemption here. So gold, as you know, we have been looking for a break out of a triangle. We are seeing prices keep moving higher. Even some accelerations are happening here. So maybe 2,650, 2,700. This could be quite interesting. But keep in mind that that we are here in a 5th wave, okay, of a higher degree wave 3. So still, don't get too excited with any kind of new setups here on the long side. I just think that you are a bit late and that we should be aware of a new correction here. But of course, it may take time before we will have enough of price data to say that we are topping out. For now, it still looks it has some room to the upside. Okay, traders, I hope that you enjoyed this presentation. If you are interested, as you know, in more analysis, make sure to visit us at wavetraders.com, apply for a trial, or you can just simply follow these free resources here, free charts, blog posts, when we will update some of the analysis through the week, or you can also follow us on Twitter. Okay, traders, have a good day, and I will talk to you soon. Bye.